The SEC is going all in on crypto. Recent comments from the SEC chairman are perhaps the most bullish comments from a government official that I've seen in half a decade in this industry. In today's video, I'm going to break down what exactly was said, why the SEC is likely going in so heavy in crypto, and what their plans are and what this might mean for the future. Now let's get into it. If you've been in the digital asset space for a while, you know that historically the US government, and especially the SEC, has not been the biggest friend of crypto. Lawsuit after lawsuit, you've had founders charged with crimes even, you've had people debanked. While that's all seems to be changing, the new statements that I'm going to read to you from the SEC chairman basically say that the SEC is shifting from trying to tamp down on the crypto industry in the US to trying to actively promote it and promote the movement from analog finance to digital finance. That is the movement from the traditional finance system to the financial system where assets are tracked and exchanged on-chain 24/7 in a completely transparent global database known as a blockchain. And additionally, he goes into a lot of interesting things like saying that American citizens should have access to a lot of the things we don't have access to now. Anyone who's been American and has tried to use crypto applications knows that oftentimes we're blocked from using important applications, or airdrops will block US users from redeeming them. And the SEC chairman actually explicitly says that he's setting a goal of changing that. But before I get into the actual statements, I want to remind everyone that we have an awesome newsletter that my team puts out once a week. And this goes through everything you need to prepare for the week and understand what's happening in crypto in 5 minutes. So it goes through stats, news summaries, on-chain analysis, and more in about 5 minutes. Check that out at newsletter.dynamodefi.com. All right, let's break down exactly what was said. This is from a speech yesterday, the day before I'm recording this, called American Leadership in the Digital Finance Revolution by Paul Atkins, chairman of the SEC. I'm going to read some excerpts from it. He starts with an introduction and then says, "Today I would like to discuss what Commissioner Hester Peirce and I are calling Project Crypto, which will be the SEC's North Star in aiding President Trump in his historic efforts to make America the, quote, crypto capital of the world." And now remember, this is the same regulatory agency that was responsible for much of the crackdown on crypto over the past 4 years. So this is an incredible, basically 180-degree change from how the SEC was before, where they're no longer trying to tamp the crypto industry down in the US. Instead, they are explicitly trying to promote crypto industry in the United States. He goes on to talk about the history of capital markets. And I actually think this is worth a read if you're interested in blockchain, because understanding how this technology fits into the history of capital markets and finance in general will help you understand the value of it and help you understand exactly how big this could be. And I'm going to tell you in a second how big this could be. Well, I'll use the SEC chairman's words to tell you how big it could be. He talks about the formation of capital markets going back to 1792, going into the paperwork crisis on Wall Street in the 1960s, the transition to the ticker tape machine, and then ultimately the transition to electronic trading in the 1990s. He then goes on to say, our regulatory framework need not be anchored to an analog past, unkind to new frontiers. After all, the future is arriving at full speed and the world is not waiting. In other words, the SEC is on board with the movement of finance from analog to digital, digital being digital assets, aka blockchain. He goes on to say, so today I would like the world to go on notice that under my leadership, the SEC will not stand idly by and watch innovations develop overseas while our capital markets remain stagnant. He then says, to achieve President Trump's vision of making America the crypto capital of the world, the SEC must holistically consider the potential benefits and risks of moving our markets from an off-chain environment to an on-chain one. All right. So he's already talking about moving markets from off-chain to on-chain, not just allowing people to form on-chain businesses. And then he says in the next paragraph here, Project Crypto is a commission-wide initiative to modernize the security rules and regulations to enable America's financial markets to move on chain. Enable America's financial markets to move on chain. So what they're talking about here is the same thing that we've heard BlackRock talk about, the same thing that we've heard other leaders on Wall Street talk about, which is that ultimately the vast majority of securities over the next decade are going to move into an on-chain environment. And we're already seeing that with stablecoins, where nearly $270 billion of stablecoins are tokenized US treasuries or fiat have already been tokenized and are being traded on chains. That's $270 billion of stablecoins already. First step on, I think, the path towards tens of trillions of dollars of financial assets being tokenized and tradable on chain. And the fact that you even have the SEC talking about this, America's financial markets moving on chain, is a sign that they understand the value of the technology and they're preparing to unleash it as an innovation. All right, so let's break down some of the highlights of their plan, right? Because so far it's been a lot of grand statements. Let's see exactly what's in Project Crypto. First, they're working on bringing crypto asset distributions back to America. If you follow the structure of a lot of crypto-based organizations, you know that oftentimes they'll have one organization in the US, another one overseas, and then the one overseas is the one that's actually issuing assets. The one in the US will be, for example, some sort of foundation that's dedicated to, quote, research, and it's kind of like a wink, wink, nod, nod. These are two different organizations, and it ultimately is confusing and a roundabout way of doing things. So what they're aiming to do here is bring it back so people can actually safely distribute assets from the United States. He goes on to talk about confusion over the application of the Howey test. Now, Howey test, you may remember if you've been following crypto in the US, is the test to determine whether something is a security, and confusion over how and when it applies to crypto assets has led basically many crypto industries to exit the country entirely, or US-based companies to not issue tokens. So he says entrepreneurs need and deserve bright line rules for determining whether security laws apply to their business. So that's a good first step. The good first step is to say what actually is a security and not, because then as an investor, you can know whether there's the overhang of a token receiving a lawsuit for being an unlicensed security. And as an entrepreneur, you understand whether you are compliant or not. And then he talks about what about when a crypto asset is a security? And the commission staff is developing clear guidelines for what market participants should do in those events. And they hope to help market participants slot assets into categories like digital collectibles, digital commodities, stablecoins, assessing the economic realities of each transaction. And then in the event that it is deemed a security, they'll develop a regulatory framework that allow those products to, quote, flourish within American markets. And I think that this is also a key point. I'm almost done reading from this speech, but there's just so many gems in here. But the part about allowing things that are securities to flourish is important, because let's be honest, there are a lot of top 100 tokens that realistically are securities. The supply is centralized, or they function as proxy equity with voting on decisions for the organization, or in some cases they even receive a dividend. Those things, realistically, many of them will be deemed to be securities. But what he's saying here is that's not the end of the world. They are going to develop a regulatory framework for what should happen and how crypto assets that are subject to security laws should function, and even talks about purpose-fit disclosures, exemptions, and safe harbors for ICOs, airdrops, and network rewards. So if you like airdrop farming, like many people on this channel, likely it's going to become easier in the US. It's already been possible to get around geoblocks with a VPN, but we won't have to deal with that. And occasionally there are airdrops that will block VPNs as well, or require some sort of KYC. And the speech honestly goes on quite a bit longer. But what I want to highlight here is the fact that the SEC is now explicitly talking about what we've been talking about on this channel for so long, which is capital markets moving on chain. And then you have to understand the context this is into, because this comes just a day or two after this White House report on strengthening American leadership in digital financial technology. This is a 200-page report. 170 pages. I'm definitely not going to read through this entire thing. However, I want to highlight a couple things in here, because I actually had the chance to create some of the a couple of the graphics in here through my work at DeFi Llama in partnership with the Treasury Department, and they're highlighting a lot of the stats we've talked about in DeFi on this channel. They're talking about total value locked in DeFi, deposits in DeFi applications. They're talking about trading volume on decentralized exchanges, the revolution of crypto transactions moving from centralized exchanges to DeFi. And they're talking about, of course, stablecoin growth, which is one of the I think most bullish stats for the industry, perhaps the first killer app of crypto in general. And so who are the major beneficiaries of this? The simplest is the largest smart contract networks. If you have capital markets moving on chain, they're likely going to go to the networks that are already the largest, that have the biggest security budgets. That means Ethereum, that means Solana, that means several others that already exist. And if you want to set up a well-balanced crypto portfolio, you would have a healthy application to the top 4 anyways, which would be Bitcoin, Ethereum, XRP, Solana. You don't need to hold all of them, but you want to have some exposure to some combination of those 4. That's the simplest way to do this. The whole space grows, those benefit. If you want to get more nuanced, you can look at US-based crypto teams. These teams have been heavily constrained in what they can do. Suddenly they're going to be less constrained. That may mean more value accruing to the tokens. That may mean new products they can launch. That may simply mean that the team no longer has to devote as many resources to legal issues and instead can focus on doing what we all want them to do, which is build. And then the third category that I'm going to highlight are going to be any real-world asset applications. Those are things like Ondo. Those are other crypto apps that focus on tokenizing real-world assets. Because if you move capital markets on chain, it's not just going to be like trading Bitcoin, trading Ethereum. It's going to be trading actual assets that people want to hold who don't care about crypto, right? It's going to be stocks. It's going to be bonds. It's going to be real estate. It's going to be tokenized private equity. One of the great use cases of blockchain is that it unlocks the ability to more easily tokenize and trade things like private equity or private credit. It's going to be all of those, in the applications that are already there. They are where the puck is moving to. The puck is moving to having liquidity for assets that are currently not accessible to the public, unlocked via tokenization and tradable on chain. By the way, if you want more in-depth analysis about these sorts of things, in addition to my weekly newsletter, I also do a metrics-based newsletter every Friday, which goes into all of the fundamental on-chain metrics and other metrics like sentiment analysis to help you understand exactly what's going on in this market from a numbers-based perspective. If you want more videos like this, be sure to like and subscribe. Until next time, this is Dynamo DeFi.